lot of people in sort of pop culture thinking that this could be the end.
Yeah, so well, the dip that you're talking about is actually nothing new for Bitcoin. As far as percentage terms go, if we look at it historically, we've seen these types of pullbacks before.
And we are live from around the world and across the web. Going beyond the block, Mr. Greenspan, every Tuesday on the live stream. Looks like he's got he's feeling it. You're kind of loose and feeling it over there. What's in the mug, dude? What's in the mug? Deliciousness. Coffee. And a good Tuesday to you, Mr. Greenspan. How are you?
Happy Tuesday. I'm having fun. I don't know, man. I'm just not letting the markets get to me. You know, just keep building, keep moving, keep jiving. Had many incredible meetings already today, and many more planned. So slam packed.
All right.
And looking forward to getting into markets and everything that's happening in the world.
Yeah, just kind of looking at some of the headlines here on Bloomberg. Obviously, the Fed's hawkish tone impacting Bitcoin and bonds, and the latest FOMC minutes showed a divided Fed weighing inflation and rate decisions, strengthening the dollar and pressuring Bitcoin markets. So let me ask you first and foremost, with the Fed still undecided on cutting rates, how much longer can liquidity continue supporting risk assets like Bitcoin? What do you think?
Supporting? I haven't seen any support. What
Where
are
is
you
it?
talking about? Continue supporting? No, it has not. No, the Fed has not supported anything market related, especially not risk assets and especially not Bitcoin since 2022. When we've discussed this at length in previous live streams, the Federal Reserve has been on a tightening cycle over the last 4 years. And so that's what's happening. What we look forward to next is inching closer, which is Jay Powell has to go. Jerome Powell will be fired in May. We got a new dude coming in, and hopefully he leans on the money printer for a bit, and then we get some actual support.
Okay. Given the dollar's recent strength, is that tail risk undervalued in current crypto market pricing, you think? That tail risk undervalued?
I'm gonna disagree with your premise. I don't really. I mean, calling the dollar strong is maybe a bit misleading right now. What we have here, if I can share my screen.
Yeah, let's get that up there.
The dollar index.
There we go.
And we can zoom out just for reference context. Yeah, this is so 2022 when the Fed started tightening, we got some dollar strength. So that's dollar strength.
Right.
Okay. What we've had pretty much since Trump was elected right here is dollar weakness. And so when you say recent strength, yeah, sure. Over the last week, it's been strong. So this is one candlestick per week. So there's the strength. It's like that cat meme where the crypto goes down 97% and then goes up 1%, and the cat goes, "Look, it's going up."
Yeah, look, it's going up. Yeah.
But no, it's not strength. It's not strong in any sense of the word, which is what I'm actually just writing about right now. I'm in the middle of writing a newsletter for the quantum economics newsletter at QE.finance. It's free for anyone who wants to read it. In fact, what it's all about is uncertainty, because that is the keyword of the day.
Uh-oh. What? Oh, we just lost Mr. Greenspan. And let's see, he's back now. That was weird. Did your USB cord come unplugged?
I don't know what just happened, man. We gotta storm out here. But in any case, there's 4 different charts that show uncertainty at basically record highs right now. So there's a lot of stuff that contributes to that. AI, geopolitics, ongoing wars between Russia and Ukraine, China and Taiwan, potentially Iran and Israel, Iran and the United States. Who knows?
Mm.
Trade wars, and other things. And so it's just a very uncertain time at the moment. It's what's very rare is for uh, gold to go up along with the stock market. The stock market itself, the S&P 500, you can see it's right around all-time highs at the moment. It hasn't. It's stable, right? And the VIX as well, which is the volatility index,
Mm.
so is not doing anything incredible right now. I mean, it's not even elevated, right? Um, Somewhat elevated, really, but not, I mean, even just a year ago,
Yeah.
huge spikes. So
Yeah. Look at those.
that's what the VIX looks like. That's COVID right there.
Okay.
Um, yeah, I would go back to like 2008. You can see that's what an elevation looks like.
Your phone.
Yeah, go ahead.
Yeah, thank you.
You're welcome. But seeing gold go up while the S&P 500 is stable and no elevation in the volatility is strange.
Hmm.
But where we can see there is volatility under the surface. So one of the charts that I point to is a single stock index, single stock volatility, which basically means there's a lot of rotation under the surface. So people are capital is being deployed. However, they're not taking risk anymore, and that's why crypto's not doing well, because crypto is, for the most part, it's a risk asset, and it's something
Risk
that
on. Yeah.
people associate with risk.
Hmm.
And so people are being a lot more calculated about how they invest right now.
Hmm.
Yeah, and so that they're looking for tangibles. They're looking for basically anything that they can prove that's going to make them money. We saw IBM, for example. There's a lot of stuff that's just getting hammered by AI, right? Like
Hmm.
the SaaS model is completely toast. So I wonder if Salesforce is going to last another 10 years. Right? Why would any, or companies like that who are offering, software as a service, why in the world would any company use their service when, they can basically create their own CRM internally, built for purpose, built for their company,
Hmm.
right? At like pennies on the dollar. And so the productivity from those companies is going to go up, and the amount that they're spending is going to go down. But the companies who are currently relying on that, on that income, they're not going to be around much longer.
Let me ask you this. I know Amazon, does a lot of subscription as a service. How do you think that affects a company like Amazon, and where do you see them moving into the AI sector?
What do you mean that Amazon does subscription as a service? I mean, Amazon is not. I'm talking about software as a service. So like,
Man. All right. Let's see.
Somebody doesn't want to talking about this stuff.
I guess not. I think Jeff Bezos heard us mention Amazon, and Salesforce team probably got their AI bots out to shut the stream down there. That was really weird. I've never seen that happen before, man. That's crazy.
That's what it is.
All right. So, anyways, continue with your train of thought. The differentiating between Amazon and some of these other SaaS service companies that you think that are looking at some serious trouble ahead.
Yeah, exactly. That's you summed it up beautifully. With the invention of AI coding tools,
Mm.
it makes it very easy for an entry-level developer to suddenly be able to create a CRM for any company. and they'll do it like custom built for the company, and they'll do it much better, faster, and cheaper than any of these SaaS, software as a service companies. And so those are the ones who are getting hammered at the moment. And then the AI companies aren't done innovating yet. They're gonna add a lot more features. They're gonna put a lot more people out of business before this is through.
Oh, man. Let me shift gears here on you. Bitcoin bonds are emerging products that blend, I guess, debt instruments with digital assets, either denominated in Bitcoin or backed by it. They aim to give investors yield while locking in exposure to Bitcoin, and could present an evolution, as some say, in market maturity. Let me ask you this: do Bitcoin bonds really create genuine institutional yield, or are they simply more leverage layered on Bitcoin volatility? What do you think?
Do Bitcoin bonds generate yield?
Yeah, do they generate institutional yield, or are they simply, a more leveraged layered play on Bitcoin volatility?
So Bitcoin itself does not have a yield, right? It's not like, it's more like gold or a commodity in that sense. Stocks, they have a yield, they have cash flow, they have, income. Bitcoin has no income. And Bitcoin bonds, I mean, it depends how they're structured, right? There's different kinds of Bitcoin bonds. So a Bitcoin bond might have a yield, but it's not coming from Bitcoin itself. And so if you want to bundle Bitcoin into your bond, like, for example, El Salvador is doing, right? So your yield isn't coming from the Bitcoin; it's coming from the growth of the country, coming from Bitcoin City and everything. Your yield is coming from a stable yield, or for example, MicroStrategy has issued bonds where they're basically just giving people a yield, and then they're using the money to buy Bitcoin with it. And so, for me, the whole idea of structuring products on top of Bitcoin it's a bit silly, because Bitcoin itself is designed to not need any of that. And so people can just hold the underlying asset in self-custody, and you eliminate a lot of the risk of counterparties and leverage and everything like that. And so in my mind, bonds add risk to the people who are buying them. But if that's what they want to do, that's fine. It does open up the option for institutions that are not familiar with self-custody and don't have a mandate to self-custody cryptocurrency, it's easier for them to purchase a bond that is a structured product that they're more familiar with and they're able to handle a little bit better. And so yes, it opens up the doorway to those type of customers. But I don't think that it's necessarily essential for Bitcoin. Bitcoin stands on its own, and this is more like a layer that's being built on top of it.
Okay, I see where you're going with that. So then let me ask you, if these products do scale, does that improve Bitcoin's role in portfolios or increase systematic fragility when rates shift?
Yes.
Yes. Hold on, I think I've got a sounder for that one. Hold on. He said yes. That's a fact,
that,
Jack.
unfortunately.
Oh, you barely heard it? Did you hear it?
Yeah,
No?
I don't know why it didn't come through.
Oh,
that's a fact, Jack. I can hear it in the background, and I know what it sounds like from the spaces, man.
All right. All right.
That is a fact, Jack. So yeah, I mean, look, it does, like I said, it opens the doorway. And also, if it's done too much, it could be dangerous. So if there's too much leverage thrown into those products and too much money on the products that are leveraged, that could end up blowing up. It wouldn't hurt Bitcoin. It could hurt the price of Bitcoin, but Bitcoin and its price are two completely separate things. If you're building a house of cards, right, on top of a sturdy table, and the house of cards falls, does the table fall with it?
No.
No. So you can build whatever you want on top of Bitcoin. That's fine. Bitcoin's not gonna be affected by it. If there's a significant run up on the price of Bitcoin because of those products that you've built on it, and therefore they increase the demand and people purchase the Bitcoin as collateral to pay out those assets, and then they're forced to sell those assets because the assets aren't doing so well. They over leverage themselves, and people are forced to sell them, and they're forced to sell the Bitcoin because of it. Well, then the price of Bitcoin can go down as a result. However, I would posit that it's not going to go down more than it went up in the run-up. Not significantly more, anyways, and certainly not over time. But pullbacks are not something that hurts Bitcoin. Volatility is a feature.
Yes, it's a feature, not a bug. Right. I think that's the great thing why a lot of us and a lot of people who get into the asset class, they're drawn to it a little bit, I think, because of just that volatility. And if you learn to handle that and sustain that, and it takes a lot. I mean, I think for even veterans like yourself, and I'm certainly no spring chicken to the asset class, but I think what is the old saying? It's time in the market beats timing the market. And so you get a little used to these pullbacks, you get a little used to the volatility. You see some of these patterns in the 4-year cycle. And so, kind of like how you started off the space, you're like, yeah, I'm feeling good, even though Bitcoin's sitting at maybe 63,000 right now, and it's looking potentially like it could go even lower. So let me ask you this then. With Bitcoin struggling right now to sustain higher levels lately, is this, what would you say, a structural trend or just maybe temporary macro noise?
Is the pullback a structural trend?
Yeah, with Bitcoin struggling to sustain higher levels lately.
I mean,
is this a structural trend or just more of a temporary macro noise, would you say?
Yeah, I think there is a lot of macro noise right now. And I think unprecedented macro noise right now. And I think that is absolutely affecting the price of Bitcoin. I still have trouble calling this a bear market. Let's be very clear on that. Because a bear market is expectation that, a general expectation that price is going to continue to go down. And certainly there are some people out there who are calling for lower levels. As we discussed last week, a 10K call is utterly ridiculous, in my mind anyways. I mean, it's, look at it, rule things out, anything can happen, but it's not responsible analysis. Let's just put it that way. But even a 28K call is very difficult to really imagine right now. I think we said 58K initially, right, which was Peter Brandt's tweet, which is right here where I got my dotted line at 58K. So I mean, that makes sense to me, and I think that would be absolutely amazing place to buy it. But one of the main narratives that's happening right now, the Federal Reserve and other central banks losing credibility. And in that sense, I mean, Bitcoin is the perfect asset to hedge against Fed credit credibility. And you were mentioning it as well. The Fed is divided right now. That's not very common. They don't usually disagree in-house. I mean, granted, again, we're gonna have a regime shift pretty soon. We're gonna see how that affects things. However, it only serves to underline the point that the Fed is not an independent body from the White House and the rest of the administration. As much as and their credibility really does hinge on that, which is why they keep saying we're not political, we're not political. And then you see something like Jerome Powell taking pot shots at the president and saying, well, you know, he's pursuing me not because of my not because I lied about the building, but because I'm not he's trying to force me into cutting rates.
Yeah.
Right. And so clearly, yeah, it's not independent. Clearly, it has political bias, and there is politics that play inside of it. And so it's just a whole it's a whole paradox that's playing out in the public's mind, in the public's eye, for the people who at least understand what the Federal Reserve is, anyways.
Well, then let me ask you this. Do you think institution allocators are generally long on Bitcoin spot, or are they hedged via derivatives and thus maybe being less committed? You know what I mean?
Well, I think that a lot of the, I mean, if you're talking about institutions specifically, then we'll be looking at the ETFs, right?
Yeah, let's pull, there you
go. This is the heat map. So this is IBIT, which is BlackRock's Whopping, Whopper. FBTC is Fidelity. And then Grayscale.
And you got Kathy Wood over there.
Yeah, there she is. There's Kathy.
Yep. Hi, Kathy.
Okay. And here is the daily flows.
Yeah. Which
we can certainly go to like monthly. And so, yeah, I mean, they've been deep red since November. And this is the overall open interest, right? Which is basically how much exposure they have. Sorry, no, this is these are flows still. Okay, so here's the open interest.
Okay.
Obviously with IBIT, the green one, and then FBTC here. So yeah, pretty much since October, there was a peak in ETF holdings in October 10th, which I believe.
I was going to say it's October 10th and everything went down.
Yeah, that was the huge spike. So that was it for institutions. They started offloading since then, but
oh man, again. He's getting rugged. I've never seen this happen so many times in a space, man, or on a stream. All right, I think you're back now.
I've never seen it ever on a stream, honestly.
Yeah, this is weird.
Yeah, I think somebody's really not happy with our content being censored in that.
Well, you know, the truth will set you free, but first it's going to piss you off. So obviously we're upsetting some folks. So
clearly. So yeah, that's where we're at as far as institutional money allocation is concerned.
All right.
Yeah, looks like about 1.2, 1.3 million Bitcoin.
You'd mentioned the Fed earlier. And so let me ask you and turn your attention to that. If long-term yields rise another 75 to 100 basis points, what does that imply for risk assets, especially something like Bitcoin?
If long-term rates rise?
Yes, if long-term yields rise another 75 to 100 basis points.
Yes. Okay.
What does that imply for risk assets?
Yeah, I mean, this is stuff that I'm covering in the newsletter later today, so I definitely urge everybody to go to QE.finance and take a look at that. We have a very steep yield curve, to be honest, right now. Long-term rates are trading at a premium over. I mean, this is overall is not an unhealthy yield curve, to be honest. Like just the shape of it. But to contrast that with the flat yield curve that we had, 6 to 8 months ago, you can see that long-term yields are starting to rise, and I think rightly so. But it basically means that there's a premium for holding through the volatility that's being expected. There's some volatility that's being expected on the short term, and for holding through that, there's definitely a premium. The spreads they're not bad. I mean, historically speaking, I mean, here's the 210 spread. It's certainly above 0, and also the 10-1. And there, I mean, this inverted yield, I mean, did definitely foretell what's happening right now with, you know, the market being so crap as it is. But overall, what we're looking at is basically a regime change in economics, and the correlations that have been prevalent over the last few decades are breaking down in front of our eyes, which makes it a very difficult time to navigate financial markets, in addition to everything else that's happening. And so I would just say it's even likely that we're going to be seeing long-term yields rising from here, and at some point, that's going to have to snap.
So then, what specific data points should folks be watching that signal the next big move in yields or even the dollar? You know what I mean?
I would keep an eye on everything that's happening in the news. I think that, you know, it's difficult to take any of the politicians seriously at the moment, especially with, you know, aliens and Epstein. I mean, it's just a funny time right now.
Feels like we're in the end times. Jeez.
Man, I think so. I know we've discussed this before, but very specifically regarding, you know, Jewish prophecy regarding the end of times. It is literally something that has been, like said, it's going to be very uncertain times. And well, there's never been more uncertain times than we're in right now. I mean, people cannot trust their leaders. I mean, all of those 6.5 years. 6.5 years since Epstein killed himself in jail. And that is,
did he?
Well, since he supposedly killed himself
allegedly.
in jail. Allegedly, people saying he's not even dead. Okay, well, I don't know about that. I'm pretty sure there's been an autopsy, but I can't say anything to the contrary at this point. I mean, who knows? But that's the point, right? We don't know. Nobody knows anything right now. It's literal chaos, but zero convictions. There's only been 2 arrests, and that's only within the last week, and that's only in the UK. There are 0 people who've been arrested in relation to Epstein. I mean, this is some of the worst stuff imaginable.
It's awful.
I mean,
we basically have confirmation that there is a satanic, cannibalistic, pedophile group of elites running the show, from politics to finance to industry across the board. And that's pretty much been proven true in the Epstein files, and it's way, way worse than a lot of us have even imagined. So let me ask you this then: in light of what's happening with the Epstein files, and in light of what Trump has said that they're going to declassify alien information, UFOs, etc., if this declassification happens, this big announcement from Trump, what does that do then, do you think, to markets if Trump actually comes out from the Oval Office and makes a big statement? Hey, you know what? Alien life is real. Alien technology is real. We are not alone in the universe. How do the markets react, and which sector of the market reacts first and worst, do you think?
Why would the markets care about aliens?
Why would they not? I think it's a big thing. I think it's a foundational shift for a lot of folks, and I think it could create a lot of turmoil, uncertainty, and obviously, if they come out and say this, a lot of people have been lied to for over 70 plus years. I think that's going to shake a lot of certainty, a lot of conviction in people. So I think that creates a lot of fear, and when people are afraid, as well as I do, look what happens. It's risk on is no longer there. It's all risk off. People are looking to move to safer assets, something that's secure. So again, I'm asking somebody who's a smarter advisor and economist than me, where do you think that might end up, and how does that play out once this announcement is made by Trump that yes, we're not alone, that there are aliens, et cetera, whatever that looks like? How do the markets react? And again, which sector do you think, in your estimation, gets hit hardest the first?
I think that the biggest issue is the credibility of our leaders. And yeah, the fact that they've been lying to us for all this time, they knew about it and they just didn't tell us, or for some reason chose to cover it up. And that lie is baseless. At least with Epstein, like, we understand why they might lie, right? Like, about the aliens, what is the purpose of lying about that? That is, like, there's zero, like, what you maybe in for the first month you say, okay, let's cover it up so we don't cause a panic. But like after the first few years, you just say, like, you're just lying to perpetuate the lie. It doesn't make any sense. And through changing administrations, why would anybody continue to lie about aliens? Like, if they are there. First of all, we still don't know that. But if that's what happens, as you're saying, and it as plays out as you say, like, what was the purpose? What was the purpose of the lie?
For 70 years, the purpose of the lie, I think, was to control technology, perhaps alternative energy sources, and to maintain a structural power base over the masses. Again, you look at some of this stuff that even since 1947, since Roswell, how much of that technology is ramped up, how exponentially that's grown, from the transistor to aerodynamics to computers, et cetera, that a lot of that seems to have grown as a result of whatever reverse engineering of technology that the U.S. or other foreign governments may have had. Obviously, the U.S. seems to be at the forefront of all of that. But I think that at the end of the day, the whole narrative also is because it would upset, if they had come out, I think, in the 1960s even, and said, yep, aliens are real, that would have caused a massive panic. It would have destabilized countries. It would have upset the apple cart, and a lot of people in their faith and the foundations of their faith would be rocked. And I think now what we've seen is this slow drip of declassification, this slow drip of acknowledgement that this is out there. And so now at this point, if and when the governments do come out and make this announcement, most people are going to be like, yeah, we kind of know, we kind of have been expecting it.
Yeah, to me, the biggest market, to answer your question, is this one right here, is the debt. I mean, governments are bad with money. I mean, that's no friggin' secret, right?
Yeah.
And they're borrowing more money than they could ever hope to pay back, and the rate of borrowing is increasing far faster than anything that they hope to collect with revenues. I see this one right over here is new, right? The $374 billion that Trump has managed to collect with tariff revenue. I mean, it helps, but it doesn't offset anywhere near what's happening, with this one, right? Just look how fast $100,000 goes.
Jeez.
On this one, $100,000, not so fast here, right? And so there's not even a real comparison. So as far as the debt keeps rising, the only real way to manage it is to devalue the currency.
Okay.
The problem is in the United States is that the U.S. dollar is the U.S.'s number one export. I mean, the U.S. has been exporting inflation for as long as for as long as I can remember, for as long as we've been around, anyways.
Mm-hmm.
At least since since the 70s, which was the last major regime change. With the with the end of Bretton Woods. So yeah, I mean, this is like this is the biggest market that this affects. So this is credibility of the largest borrowers on our planet is literally what's at stake. And with that, all of the debt that they owe. To me, I mean, none of this is literally problematic because I didn't borrow that money. And if the people who are and their plan to pay it back, I mean, their official plan to pay it back, they're not going to tell you their plan to pay it back is to devalue the currency. Their official plan to pay it back is tax revenue, which in my mind is another word for stealing.
Mm-hmm.
I mean, most people who live in developed economies pay somewhere in the neighborhood of 40 to 60% of every dollar they make to the government. I mean, this is outright stealing.
Mm-hmm. It's a good
The
way to put it.
United States went to war with England in 1776 over a 2% tax on tea. And now they're charging their citizens 35, 40, 50% taxes. In what way is that justified? And if you don't pay your taxes, you go to jail. So they're literally putting a gun to your head, threatening your freedom if you don't pay them.
Mm.
Do they give you any sort of choice about how that money is spent? None.
No.
Zero whatsoever. The politicians make unilateral decisions. They give you a dumb choice once every 4 years, and you don't really even have much of an option as far as who gets on those ballots every 4 years. You're forced to choose this evil person or this evil pedophile or that evil pedophile.
Yeah,
every 4
pretty
years.
much. Yep.
And and I remember saying it at the time, like, I don't like Trump. I think he was a better choice given two very.
Oh, see, you just said you don't like Trump and you got cut off. See, that's what man, you can't say you don't like Trump, man. You're going to get cut off. Look what they did to you, buddy.
I mean, he's not a good person.
He just came out and said that you don't like Trump, and immediately he's cut off. You're done.
Boom.
Damn,
Yeah,
dude, the power of the state.
Censoring us today.
Oh my goodness. Wow.
But my point is that they steal money from us and these taxes, and they even though they're stealing, about 50% of our income, it's still not enough to pay back all of the money that they're borrowing. And the difference between what they're stealing and what they're borrowing is getting exponentially bigger to the point where it doesn't make any sense that they would ever pay it back, or they could ever think about trying to pay it back. And even if talk about devaluing the currency as a last resort, you know how much you'd have to devalue the currency in order to start setting this right? It's unfathomable.
What does that do to rates then, if they devalue the currency?
Well, what it does is it gets rid of the governments that we have. The whole system needs to change radically, drastically. It needs to be turned on its head. This cannot be sustained.
This is going to get you cut off again, man. You keep going down this road, they're going to cut you off again.
Let them cut me off. There's other channels. I can go on X. I'm allowed to say what I want on X these days.
Yes.
But the whole system of governments as we know them is unsustainable. And everybody knows it. The saving grace is that they've been able to kick the can down the road.
Right.
And they continuously kick the can down the road, but eventually the road ends. And this is where we are today.
Well, you mentioned the devaluation of currency, and I want to kind of, in the remaining moments that we have here, pivot to another topic revolving around currency, and that's Japan and the yen. I've been listening to we do these spaces daily. You're part of them. 10 a.m. Pacific, 1 p.m. Eastern, and we do the Trading Tuesday one coming up here at top. Well, I guess about an hour and 15 minutes. One of the guys who I've really respected for a long time, Fiboswani. He's been ringing the bell hard about Japan, hard about the yen carry trade. I've been listening to him. I've been listening to Christopher Inks over there, Texas West Capital as well. And so I started looking into this Japan yen carry trade. This is a potential poison pill. Maybe you can walk us through a little bit about that as Japan tightens, the yen strengthens, and the carry positions unwind. So let me ask you this: how fragile is the yen carry trade right now? And what would an unwind look like, I guess, in risk assets?
What I'm trying to explain to you is it's all fragile.
Mm-hmm.
The whole entirety of our modern economy revolves around debt.
Yeah.
Everything revolves around debt. The government owes money to everybody. And everybody who's been buying it, all of these financial institutions, all of these banks, and all of these countries, they own massive amounts of debt. And so when countries report their holdings and what they actually own, a lot of it is vapor.
Mm-hmm.
And when they start to default on these debts, they're not going to be able to continue paying their bills. The governments go under. So, I mean, you're asking about specifically the difference between Japan's debt and the United States' debt. Well, it's all the same.
But the way I understand that the yen carry trade works out is that folks like hedge funds have been going over there for years, getting cheap money at basically 0% interest, coming back and converting that into U.S. dollars, buying assets or bonds, treasuries that are yielding 4 to 5%, and that is all straight profit for them. So then, if Japan, like they did just I think it was back in December, they rose their interest rates from 0 to 0.75. That caused the markets to go, oh shit, what's going on? And so then, as they raise rates, that means those people who borrowed that yen, now they have to pay back as the yen strengthens. That's more money that they have to pay back. And so they have to unwind those trades, selling those stocks, selling those bonds, selling those treasuries, et cetera. And what I've seen so far is that a lot of minds out there on the app and across the timeline are saying, hey, the Bank of Japan is probably going to be looking to increase their rates to full 1% sometime in 2026. What does that do to the overall economy? Because this is like, to me, the way I understand it, this is global macro plumbing financially. And if Japan goes down, man, I think that's the canary in the coal mine that could really spread contagion to other markets.
Right. And it's unfortunate for Japan, clearly. So what happens here, if you've borrowed from Japan and you've lent to the United States, and then the United States can't pay you back. So first of all, Japan's not getting their money back. So it doesn't matter what the interest rate that they charged you on that money is, they're just not getting the money back. And the person who's done the carry trade, which is the person in the middle, the investor, is also not getting their money back. They've lent it to a bottomless pit. And so when that collapses, it all collapses. It's the same, it's all the entire system collapses together. And then Japanese government cannot sustain itself. And the United States government cannot sustain itself. Does that mean the countries are going away? No, but their governments certainly will. Because governments are bad with money. They're good with maintaining a semblance of order and leadership. And they're good with targeted harassment of individuals who are not paying into their cartel, but if they're not good with managing the money that they've stolen. And so that all has to go away, and it will very soon.
How does it end? And how do you see this unwinding in the next, let's just say, the next 18 months?
And credibility is a direct influencer of whether or not people are willing to lend. So government loses credibility. Therefore, people are less willing to lend money to the government. That means the government needs to raise those rates in order to continue to attract more people into their Ponzi. And if people are still not interested in lending money to their Ponzi, they're going to raise rates even more. And those rates end up going through the roof, and they're still not going to find any bids. At the moment, we just saw gold surpassing the US dollar as I mean, just yesterday, I think, even maybe today, I saw the headlines that gold is now held more than dollars as a reserve currency. What does that tell you? It tells you people don't trust the fiat anymore.
Yeah.
Bitcoin should be doing very well in this environment. And the fact that it's not is actually batshit insane.
What's your estimation of why it's not performing well?
It's just, in my mind, it's just short-term misalignment of narratives. Because people see it as a risk when they don't realize that the real risk is fiat currency. And once they realize that, then I mean, they're gonna all start piling in. How does borrowing fake money to buy real money never looked so good?
That's true. Why does Sailor just keep gobbling it up? So then what does a new system look like then? Obviously, and I saw a couple other folks on the timeline kind of basically echoing your sentiments as well, that it's really debt, that fiat equals debt, that debt equals fiat. The two words are interchangeable. So what does a new financial system look like, and how long does it maybe take to implement something like that?
It's already implemented. It's called Bitcoin. I mean, to be perfectly honest, I mean, I haven't been dealing with Bitcoin very much lately. I've been dealing more with Solana and the currencies on Solana, because I mean that's where QE is, and that's where I've been doing most of my business, which doesn't really require Bitcoin. And most of the people who are customers and contractors are familiar enough with cryptocurrency that we can use Solana in place of Bitcoin, but and Solana-based tokens, that's not an issue. But for the beginners, at least, the system is already in place. The system already has sufficient trust, and that's why I kind of chortle when I see these big financial people going, "What's Bitcoin's narrative? Bitcoin doesn't have a narrative anymore because it didn't hold up under the stress." Like, do you understand how idiotic those tweets are going to look in a few months from now? It's absolutely, it's silly. It's really silly, because Bitcoin has now opened up the bridges to all financial institutions in the world. There's not a single financial institution that doesn't have an easy on-ramp. And so they might not be motivated at the moment because, well, fiat is kind of doing okay. And wow, look at gold. Oh my gosh, let's get some of that because it's going up. It's a momentum play. But Bitcoin is undervalued compared to gold, where everybody understands that Bitcoin is digital gold, more transportable, more sustainable over time, and easier to transact, especially internationally, and the settlements. And so you ask what the system looks like after. I mean, there's already an alternative that's working, and everybody understands it as the alternative. And so there's no question of narrative. The narrative has been there all the time.
I've got to ask though. Then I mean, I can't see
under systemic collapse. I mean, that's the first option.
I can't see central banks just all of a sudden relinquishing control of their power, to something like Bitcoin. I think that there's, obviously that's why we look at, to me, stable coins and CBDCs, all those kinds of things that are being mentioned out there as fiat 2.0, pre-mine.
Where do central banks draw their power from?
Where do they draw their power from? I would say probably from the money printer, from being able to control the supply of money, right? Being able to issue currency ad nauseum, yeah.
And so if we're talking about the Ray Dalio world, Ray Dalio several weeks ago said we're looking at a potential collapse of fiat debt-based currency.
Yes, he did.
If we're looking at that, and this is not just radical zealot Mati talking. We're talking about Ray Dalio here, who's actually like a respectable person, economist and analyst, saying something like that. So then let's take that. Let's imagine that world where fiat no longer has value. Where do the central banks play in this? They have no more power. Nobody's going to care what they say. They're powerless. They can't even pay the rent anymore. Somebody will come in and buy the Federal Reserve building for a Bitcoin.
I've got the hold on a moment. I've got the Ray Dalio clip here. I want to share this with you. Let me just pull up and share my screen here. Add new. Okay, great. Let's see here. Let me just share this. Here we go. Yeah. Here's Ray Dalio talking about exactly what you just mentioned.
It's the beginning of the end of the monetary system as we know it. It's not just the US dollar, it's the fiat monetary currencies. So the UK, the euro, Japan, China all have similar debt problems and so on, and are dealing with the same interrelationships, which is the reason you're seeing gold being chosen by the central banks. They want a currency. Gold has always been the main currency, and it's the only non-fiat currency, in other words, not the currency that can't be printed, that they want. And so that's why you're seeing central banks move and sovereign wealth funds move to gold, and that's the nature of the shift of the monetary system.
So there's your good friend Ray, basically summing it up. I went so far, and that was back from January 31st when that came out, right around there. And I went so far as to say, I like Ray. He's pretty sharp, knows what he's talking about, but I would just insert in the place of gold, I'd insert Bitcoin. So far, we haven't seen any central banks doing that yet.
They won't, and they might not. I mean, if they did, that would be smart. That would give them legs. But they won't, because they're stubborn, and so they're going to go down with the ship.
Really? See, I can't imagine that they were just going to willy-nilly just go down with it and not try to do something to still maintain their power base and their control.
Do you remember, and I've seen Lynn Alden tweeting her heart out about this. You remember when they were talking about auditing Fort Knox?
Yeah, she mentioned that yesterday, didn't she? And what happened to that?
We have no audit still.
Yeah.
We don't even know that the gold exists. And so if it doesn't, obviously we don't know.
Right.
However, all of that movement on the chart is worthless because gold has a problem that Bitcoin never can, right? Which is the amount of paper trading that's happening in gold is unknown. And so when you buy gold on a broker, you don't know if you have real gold or not. Most likely, those brokers are selling out the same gold 5, 10, 50 times over. And so that problem can't really happen, even when we're talking about structured products that are built on top of Bitcoin. It's very difficult to obfuscate because Bitcoin is digital truth. You can audit Bitcoin's paper trail and lead it back to the exact transactions, the exact Satoshis that people are holding in their wallets. And if you can't, you shouldn't be buying those structured products, because there's no way of knowing. We've been talking about that from the beginning of structured products on Bitcoin. Gold has no such thing. So this is why, first of all, I won't ever buy gold. I'll buy physical gold coins, silver coins. That makes sense to me. But buying it on a broker and holding it in case of systemic collapse, your broker goes under, you've got shit.
That's basically the equivalent of leaving your Bitcoin on an exchange, is the way I hear that.
Even worse. It's even worse in my mind. I mean, yes, essentially it's the same thing. If the broker goes under, you're not getting your money back.
Yeah, you're toast. You're toast.
And if the fiat currency system collapses, and people are holding gold on Robinhood, or they're holding it on CBOE, don't matter. Those companies are gone. If those companies are gone, then where's your gold? Poof.
Couldn't the same then be said about Bitcoin ETFs? If you've got an ETF, you don't actually really hold the real asset.
I wouldn't buy an ETF. I mean, they're safer than a gold ETF.
What? He's still had diaper.
It's fine.
See, don't you see it's disgusting for him to sit down?
He's not. He doesn't have poop.
Jeez.
Fine.
Jeez Louise. Don't you get it?
Want back?
Yeah. He has poop.
Is it time to take a poop? Okay, on that note.
If you see brown in there, I'll stop my live stream and I'll change him right now. No brown.
Oh my God.
A lot of it.
Jeez Louise. All right, so take off his diaper.
No, you.
Put him in the bath.
No.
Point is, these governments are about to be a lot more embarrassed than I am right now. They've shit the bed in a big way. They've kicked the can down the road.
Your kid's poopy diaper doesn't even compare to what's coming, is what you're saying.
Basically.
Daddy.
And
Daddy.
everything that we're seeing in the markets
I'm not
is
staying upstairs
corroborating
with
that.
you.
Okay.
It seems like it's almost a systemic kind of maybe controlled collapse in a way that the way this is going. Or how does this unwind? How does this whole debt fiasco unwind and play out in your mind?
Well, this is unprecedented. We're literally in unprecedented times right now, and I don't want to be like, Dr. Doom or whatever, or I'm not here to say I told you so or whatnot. But generally, how these things work is, slowly at first and then all at once, which is exactly how the Great Financial Crisis played out, right? There was a growing lack of confidence until everybody realized that it was front page news and there was no hiding it under the rug anymore. And for me, Epstein, the aliens, war, I mean, it's all kind of like just pointing to the lack of credibility. The lack of credibility has a direct impact on the rates. The rates impact everything else around them. And when they can't get a bid anymore, even though the rates are going through the roof, that's when it's over for them. When the rates skyrocket, that's what you're looking for in the system. You say, oh my gosh, the rates are skyrocketing and they still can't sell. That's when nobody trusts them.
What is there going to be like a single black swan event that leads us to that tipping point? And if so, what does that what would it be in your estimation? Because something is going to be the straw that breaks the camel's back, right? And it might not even really. Could it be the Japan carry trade, or where do you see that? What is that catalyst that really just pushes this thing over?
This number needs to start going up.
NGU on that one, huh?
this number needs to start going up real fast, because this is embarrassing for the entire system. And every time this clock ticks, it gets even more embarrassing, not only for the people on this list, but for every single mother effer who failed to hold them accountable for what they've done.
Mm-hmm.
These people need to be in handcuffs. And once that happens, I think it was Pam Bondi who said it recently, right? If we arrested every single person on the Epstein list, the whole system would collapse.
Good, let it.
Your
Let
terms
it.
are acceptable.
Yeah, we're all for it.
Go for it. Like, what are you threatening us? Let the system collapse.
I've got to imagine though that there's going to be a lot of people, normies to an extent, that are going to feel a lot of pain when this happens, whether it's through their 401ks or whether their investments might be. There's going to be a lot of pain felt for a lot of people globally.
Rip the Band-Aid off. It's all right. We're already in a very painful situation, and the longer this plays out, the more painful it will get.
Mm-hmm.
It's not even a joke. Since 2020, they printed more money in 18 months than they had in the last 200 years.
Yeah.
And we all felt high on that, getting those stimulus checks, like free money, and it was so easy to make a living all of a sudden. But then inflation, reality set in. You can't just print money out of nowhere. The money is just paper.
And that's kind of what Japan is facing. They've been continuing to print money, and then inflation continues to go up and up and up.
And eventually that has to come to a head. And they've been playing that game for so long, and suddenly they overplayed their hand. It was like 2020 was the moment that the whole world goes, they're bluffing, I can see they're bluffing, and they called a bet. And you know what? And now we're in that, we called the bet, and they're sitting there stewing with their, off-suited 3 and 7, and they got nothing. And on top of that, they're pedophiles. And on top of that, they've been lying to us about the aliens. And on top of that, they just generally shitty people.
You left out cannibals and Satanists in there as well.
I don't know about that. There is no look. I want to at least, especially in administrating this website, at least go by the information that I can verify. Cannibalism has not been, in my mind, verified.
Really?
Satanic rituals, I don't. Yeah, I mean, as far as I looked at it, look, maybe I'm wrong, but
the code for jerky. They're talking about jerky and refrigerating jerky and all this talk about jerky. That's again kind of been linked to just like hot dogs and pizza are slang for other things.
It could be. I don't know, but I have to say that I don't know.
Mm-hmm.
And I've not seen the specific. Look, there's a lot of crap online, and a lot of names have come up in my researching on this website to put names onto this list, and then I look into them and I'm like, not enough evidence for me to put them on there anyways.
And Jamie Dimon on there, yeah, look at that.
Jamie Dimon was Epstein's banker, man.
Yeah.
He claimed that he didn't, but one of his underlings said in court documents that he had a conversation with Jamie Dimon about Epstein. Yeah. All of them are this is the beautiful thing for them, is they've all managed to maintain plausible deniability. Right? And for at least for now, because all of those files have been redacted. And so what needs to happen is they need to release the full thing with the pictures and the unredacted versions of them. There are stuff in there that should not be redacted. Like they're saying, okay, we're protecting people who are in positions of power. They should not be protecting.
No, they should not be protected at all. No, I agree with you.
And so once that happens, there will be sufficient evidence to put a lot of these people away for a very long time. And so, yeah, that definitely needs to happen. And with it, let the system burn. For me, I've been waiting for this for a long time. I don't think, look, if you have talent, if you have skill, if you have a job, that's doing something productive in this world, that's awesome. And I think that we can continue with that, find a new form of governance that works for everybody. That doesn't put people into a position where they have ultimate power and no accountability for anything they do. It's just wrong.
Yeah. We've gone well past our top of the hour mark. We've gone into stoppage time a little bit. Always a entertaining, educational, and thought-provoking experience on these Tuesday live streams with you, sir. I appreciate you making the time to jump on here and go over some of the headlines and market analysis. We've got about 52 minutes away from the top of the hour where we will be transitioning over to the spaces portion of our programming, where we will be joined by Mad Hatter and a bunch of others. And so,
see you soon, man.
all right, we will see you then. Thanks so much, sir.
Thank you. Bye-bye.
A lot of people in sort of pop culture thinking that this could be the end.
Yeah, so the dip that you're talking about is actually nothing new for Bitcoin. As far as percentage terms go, if we look at it historically, we've seen these types of pullbacks before.